traders, this is Blake Morrow, and you are listening to the week ahead video for May 21st, 2017. And I don't know quite where to start this week. It's been such a crazy week, obviously, with equities. So I'm assuming I should start there because that's probably the elephant in the room. But boy, has it been a busy week. And there's actually a lot of things going on going into next week as well that I want to point out for this video. So hold on to your pants. We got a lot to talk about. All right. And by the way, if you have not signed up for ForexAnalytix, make sure you do so. Take it for a test run, but also make sure you download the mobile app once you do that, because then you can get all of our push notifications, all of our analysis, all streamed and pushed out to you on your mobile device. All right, enough about that. Let's talk about, first of all, like I said, we're gonna tackle the elephant in the room, and we're gonna talk about the S&P. So the S&P, we had a really big sell-off midweek as the market starts to worry about the political ramifications of what's happening with the U.S. administration, namely Donald Trump, President Trump and his administration, and some of the ties that it could have to Russia. And it kind of waned on confidence in the equity markets, and you can see that the equity markets sold off, and we sold off fairly aggressively. Now we bounced back, and then right at the end of the week, on Friday afternoon, some comments have come out from the newspapers and the media, and whether it's fake news or not fake news. Anyway, it kind of affected the equity markets towards the end of the day. But we've seen a nice recovery. I think what's most important about what we're seeing here is the potential of a double top. You can see these highs here, possible double top in the market, and this trend line support that it's very minor, but it is holding the market right now. And if you just take a step back and you say, all right, well, we're still making, roughly, you could say higher highs, very brief, even though it was a higher high, and we're still making higher lows. We're not making lower lows. So until we break back below this week's low, and especially the support down here around 2330, 2320, then that's when the market technically really starts to shift. I mean, right now, we're still in a very strong uptrend, and there's still buyers, and they're abundant, and they're not backing away. But the longer term prospects of a big double top out there is for real. So that, I think, is what we have to pay attention to, especially if things start to escalate. Not even, here in the U.S., with our political environment, but, perhaps with things in North Korea, or, with any type of crisis that may bubble up. You don't know what it could be. It could spur some selling in the U.S. equity markets, which then would kickstart a lot of different correlations in the market. But for right now, like I said, we had to tackle the equity markets because we did see a brief sell-off. But all in all, technically it's not that damaging yet. Not that damaging yet. We just obviously have to be on our toes now. All right. Now another big deal is the dollar. The dollar is a little bit different from the stock market, because you can see really the weakness in the dollar index, and I don't know if the FX market's trying to tell everybody else something, but obviously you can see that from the election night, when the dollar really rallied and it hit the 200-day moving average and just rallied sharply, and we rallied ever since. We're close to giving back all of those gains, and I don't know if that's a tone that the rest of the markets should start paying attention to, but I think it is worth noting. I mean, we have dollar weakness, and a lot of people wonder if the dollar weakness is going to continue. I mean, let's face it, the dollar index is getting a little oversold. I mean, look at the daily chart. There's the RSI. I mean, we've been more oversold, but you can see the daily chart there. Here's the weekly. The weekly is near the 618, but we're still in a very big range. But I want to also show you the DSI, and the DSI is the daily sentiment index, and you have to be a subscriber to get it. But I want to just point out that the dollar index is at a 5. It tends to be a contrarian indicator, and and if it's at an extreme, which below 20 is an extreme, but we really are dipping down here into to extremes. It may bounce soon. So that's my biggest hang up. Excuse me. That's my biggest hang up right now with the dollar and its bearishness is, well, how much lower can it go currently? But I've come to the realization over the past 20 plus years that whatever is oversold or overbought can be more oversold or more overbought. So those are just things that I'm noting in the market. Now, speaking of now, this isn't just FX, but this is the bond market. I want to take you over to the 10-year treasuries. The 10-year treasuries, we have had a bounce to resistance, and you can see the 200-day moving average is coming into play. The pullback has been very minor. Now, with the equity markets that I just showed you, they rallied back pretty sharply over the last 2 days. The bond market isn't as convinced, nor is the FX market, that we're past all this. So I think what we have to watch out is in the event that the bond market really starts to break this resistance that we saw just from this last month, we start to break out here. That is going to be a signal to me that the dollar, as bonds go up, yields go down. If yields go down, the dollar tends to go down. Dollar may come down, equities may come down. That is also something that I'm paying very close attention to. Keep a very close eye on the bond market, as the 10-year is pretty much the benchmark that most bond traders, they may look at, if yield spreads are widening or tightening amongst the different bond instruments, but most traders tend to pay attention at least to the 10-year as a good average. So if the 10-year really starts to break higher, that would mean that the dollar might come back under pressure. So that's something else that I'm paying attention to. Now, as far as FX goes, you look at the euro dollar and you go, wow, the euro dollar is really breaking higher, and it is. And you can see we closed above the 618 of this big range. We closed above that 618, and the channel resistance, this channel resistance comes up at 114. Can we get up to 114, which is a 786 retracement of this entire range? Yeah, I don't know why we can't. We're at 112 to 114 is another 200 pips. I mean, it's possible, and we're not quite as overbought as we've been in the past. So, yeah, again, it's the DSI that really concerns me the most. But with, in next week, we have a lot of PMIs out of Europe. They're coming out on Tuesday. We have, all sorts of European PMIs are going to be out. That we should pay attention to, that might continue to fuel this rally or might stop it in its tracks. But keep an eye on the euro, because it did close at its highs of the week, and typically when you go out the week like that, you tend to have some momentum going into Sunday night, Monday morning. Now, I also want to take you over to the pound dollar. The pound dollar, closed above its the 130 level, its resistance. We have a nice little bullish wedge here, divergent relative strength, kind of like the euro, but you see highlighted in green. I put it in green because we don't usually use the green color scheme on our charts, but I did it to highlight, the potential of a channel, because as I wrote in the analysis here, trying to figure out why that we had a rejection from those highs on Thursday of this last week. We hit above 130, we rejected really quickly, and I was trying to figure out why. It might be channel resistance, and I know we closed right at resistance, but what if this is just really a slight upward sloping channel? Okay, so if you think about the pound, well, what if the pound is capped here? I mean, look at the look at the weekly chart, and if you take the Brexit high that night that Brexit was voted on to the lows following Brexit, we're really close to the 38% retracement. Now, if the pound is close to peaking and the euro isn't, the currency pair I'm going to look at, and I'm sure you know where I'm going with this, is the euro pound. And the euro pound, I've got to point out this chart. We're sitting at the 200-day moving average. We're sitting at a 618 retracement. If you notice over here, we had a false breakdown. It was also horizontal support, but it could have been a false breakdown if it was a triangle. And now we're back at resistance here, and RSI is knocking up against resistance. What if the euro continues higher and the pound actually gets stopped in its tracks? Well, if that is the case, then the euro pound is going a lot higher. I was talking to one of the best and most knowledgeable traders that I know, most seasoned trader that I know in the FX market. He's a legend in the markets. He's like, asset managers are really underweight the euro. And if that is true, we could get a rally in the euro versus the pound. I mean, we could continue to see a rally in the euro against the dollar, but how about if the dollar does bounce? Well, if the dollar bounces, it's not only going to bounce against the euro, it's going to bounce against the pound too. So, maybe both of them are affected a little differently. Anyway, the outperformance of the euro pound, if we clear 86.20 or so, could put some really strong bullish momentum. And if you think about like the longer term outlook of the euro pound, we've been trending higher for a while, and post Brexit announcement, I mean, we spiked up towards 92. But could we revisit like the high 80 pence level, maybe 90 pence again? I think it's entirely possible. So keep your eye on the euro pound currency. This is one I'm going to be watching very early into next week. Now, last but not least, I want to point out the Canadian. The dollar Canadian closed on its lows of the week. Now, it's suffering from a couple of different things. First of all, a very weak dollar. Okay, so the dollar Canadian, we completed a little double top here, and we're at the 50% retracement. Great. So we stopped, and it looks like maybe it might even end up being a speed bump, because if you guys don't recall, over the last several months, the market has been aggressively short Canadian dollars. Now, that has led to a massive breakout. Now, minus this week, that has led us to a massive breakout on the weekly charts. Everybody was extremely bearish the Canadian dollar. Everybody's targeting 140. And now you saw the Canadian dollar reverse at its 618 retracement. It looks like we posted a false breakout. We're back below 136. My 2 cents is the Canadian could continue to strengthen, even if the dollar does bounce. And let's say the dollar bounces against everything. Well, maybe the dollar Canadian just consolidates. But the Canadian currency looks like it could be outperforming soon. And the reason why I point all this out is we also have this week coming up on Wednesday, we have the Bank of Canada rate decision. So if the BOC starts to look at the market and monetary policy, and they want to be more hawkish, whether it's because of a rising inflation, or maybe it's to tame the housing environment in some of the metro areas in Canada, if they start talking a little bit more hawkish, that could lead to some Canadian strength. And it doesn't necessarily have to come through the US dollar Canadian. I mean, you could see it in the Canadian yen. You could see it in the, let's say, the Euro Canadian currency pair, which might be putting in some highs here. There's the pound Canadian could be another option for those of you guys that have been following along. I've been actually waiting for the pound Canadian to drop down here to 170 from 176. These are all possible if we continue to see Canadian strength. So watch the Canadian currency. I might not be focused so much this week on the US dollar pairs, just because the dollar is so oversold. The daily sentiment index is oversold and could bounce, so the dollar might bounce at any time. We got a lot of political risks. So, perhaps you start focusing on some of the cross rates, like maybe Canadian crosses or pound crosses, based on what I showed you. Anyway, guys and gals, I want to thank you for listening in. I want to especially thank you, those of you that have actually enrolled in the sweepstakes in our giveaway. Check it out if you haven't been to our blog. You got to see the winners. And so, I mean, we had so many great entries. That's Matt, and he is the winner. I see one chart on those 6 screens. Oh no, there's a few other charts there too, and a machine gun, and it's an AR-15. But anyway, there's a lot of winners. We have Eric and Doug Mack and Miguel and Bill and Dylan, and then we also have just some really great. And this is Ryan North right here. We have some really great winners, but everybody that entered, it was really hard to pick. But check them out and read about them and some of our comments that we have on there. So thanks everybody for listening. I hope you guys have a great trading week. Once again, thank you for listening in. My name is Blake Morrow with ForexAnalytix. This is the week ahead video. We'll see you next week.